This is the IC Markets MetaTrader 5 terminal I've got trading. So we can see here from the history, we've started with $200 and we are trading on a raw account, and we've mostly got profitable trades there. And we've actually made $44 in close profits, but nearly $50. There's an open trade right now that's profitable in equity. Today I'm going to show you how much I set my risk to when trading with my EAs, and I'll show you how well this is done for a very small $200 live account where I developed a portfolio specifically for a small account recently and set my risk, and it's done well. So we'll take a look at those results. I'll also be sharing the pack of EAs that took me quite a long time to develop for free, so there's some excellent value there, so stick around for that. And I'm also going to highlight a very commonly made and critical mistake when setting risk after performing a proper back test, so stay tuned for that. Also, with the new platform Algo Trading Space, we'll be testing much more expert advisors on real trading environments and sharing our results. So if you don't want to miss any of those updates, then make sure to subscribe to the channel. Let's take a look at the live results quickly. This is the IC Markets MetaTrader 5 terminal I've got trading. So we can see here from the history, we've started with $200 and we are trading on a raw account, and we've mostly got profitable trades there. And we've actually made $44 in close profits, but nearly $50. There's an open trade right now that's profitable in equity. And so let's actually have a look at the FX Blue that I've linked up. We can see that we've got a nice balance line, first of all, and we've also got, as is typical with all my EA Studio EAs, the equity follows that quite nicely as well. We can see that it's been trading just for 17 days. It makes about one trade a day, and it's got a pretty high profit factor. It's got a pretty high win rate. It's actually made 25% nearly already, as we've just shown, which is, it's anticipating as a monthly return of 42%, which is pretty good, especially since I've set my risk appropriately to have certain expectations. I've not just put on a high lot size and hope for the best, and we've got a pretty small peak drawdown in this case. It's only been trading 17 days. I made it's made about 16 trades. It's doing very well. I'll do a very quick recap. This was the portfolio in EA Studio. So there was 8 different strategies, and we can also see the statistics in here. So in EA Studio, I've done a back test, and we've got $365 profit, 65 drawdown, and 46% win rate. All these kind of things that I like to see. We've been trading nearly 2 years on this back test, and it's 628 trades. So that kind of aligns with the one trade a day, and 77% of months are on profit. So you're going to have losing months, of course, but it's mostly steadily profitable month to month. We can also quickly look at I've done the exact same back test on MetaTrader. We can see pretty similar results, 608 trades, 350 profit, 81 drawdown, 47% profitable trades. So yeah, we're seeing similar statistics there. So let's have a look at how this risk is set. We'll use the MetaTrader value, and we're just going to focus on risk. So we're just going to use this equity drawdown dollar value. And the thing that I'm saying is very, very important. It's maybe not so easy to see here, but it's important. Many people will use this percentage value rather than the drawdown. And this is a very good example. So we might do this back test, look at this and see, 21%. Great. That's what I expect my worst drawdown to be. But that worst drawdown's actually happened, I think it's here. It looks to be here visually anyway. But the fact is that the balance was a lot higher. So when it's dropped down $80 from, $400-ish, that is probably about 20%, right? So that's what's happening. But we're trading a fixed lot size. And when we're trading a fixed lot size, the minimum lot size is set to 0.01. So we can show the deals. You can see that all our trades are volume 0.01, right? So it's a fixed value. And so in actual fact, we could have put this on at any point, and the $81, we could have theoretically started the $200 account here and just gone straight for the $80 drawdown, and it would have actually been 40%. And that's why I recommend working with fixed lot values and the fixed dollar amount. It lets you set your risk easy. So to show you how that's done, I'm also going to show you if you perform a back test. Let's see how we can take those values and we can set the risk and decide what lot size to trade for different risks and different account sizes. So I've got this spreadsheet here, super quick spreadsheet. We did the back test with $200. That's the lot size we're going to trade. This is actually just a static back test value that we've done the back test for. So we can see that we've taken that value of $80 from the back test. And basically what we're seeing, it's a very simple formula. You can see it's all just linear maths really, that just says, well, we're going to have a 40% drawdown if we have $80 there. Now, the first thing we can do is, as I've said here, we can just quickly go, what if I want to have a bigger account? Well, if I want to trade, say, $1,000, quite clearly, that's very simple maths again, that $80 is now actually an 8% drawdown. So if we stick to the same fixed lot size, we know that we're just going to have this fixed $80 as our worst. So we're going to set our risk. We're going to set that account trading with 0.01 lots, and we're going to expect an 8% drawdown. If you, for example, wanted to trade on a $1,000, maybe a super small prop firm account, you could then trade let's say a 10K account. You're only going to expect 1%. Obviously, you're allowed 10%, so you could trade a lot size 10 times bigger than that, or maybe even just a little bit. Yeah, push it right to the edge. We could probably trade that. That's one way to do it. Or maybe we want to trade a live account and we want to, maybe we've got a bigger live account, say $2,000, and we're happy with, 40% risk, or maybe we want to keep it to 30% or something. Well, that's fine. We can just increase that value maybe to that and go, I'm happy with 30%, so I know what risk I'm going to trade. So it's very simple linear maths. The point I'm making here is if you do a back test using fixed lot sizes and work with dollar values, it's very easy to then just linearly calculate what your risk should be for different account sizes. That's how I do things. I'll also point out something that's worth remembering. I see a lot of over trading. We can see this strategy here. If we look at EA Studio again, like I said, 600 trades over a couple of years, similar for the back test here. It's making just one trade a day. Nice and relaxed. It's making some great profits. So everyone's behaving as expected from our back test, and this is always comforting. Profits are shown to be in a little bit of a higher profit period than is always happening with this strategy. The strategy, as we know, it's not got a linear curve. Not every single month is the same. Generally, it's got a bit of a lower win rate according to the back test, but there's periods that it does well. Let's have a quick show of that. We can see, if we go back to the graph here, this is a stagnant period, so it's winning and losing, and that's fine. And then we've got these good periods that lift up, and then a little bit down, quite stagnant, then another jump down, and then clearly we're going for another run. There's a run here, and so we're clearly being in a nice part of the, an upwards part of the markets, but we've got to just stay in the game, and that's where risk setting is critical. No doubt possibly being helped by excellent trading conditions from our chosen broker, IC Markets. For anyone interested in opening an account with them, we've got a bit of a review here, and you can open an account by clicking this button here to check them out. You can see I'm trading a raw account. Always recommend trading a professional account, so the raw spreads means that you actually really do get low spreads, but you pay a commission, which you can see if I show here. We've got actually a little bit of swap and some commission, but that just tends to be the better account, so I always recommend raw accounts for trading. So I hope that's been helpful. As promised, the portfolio of 8 strategies there can be downloaded using the link in the description. So I hope you check that out and give it a trade. It's been doing well for me. The lot size is 0.01 that I've set because it's applicable to a $200 account. But anyone wanting to trade it on a bigger account should just do as I've shown there and just scale it up appropriately for your account size and your risk. Could even be used on prop if the risk is adjusted correctly. Also be sure to check out this video where I show the development of this portfolio, and the link in the description to my forum post showing loads of consistently great results and how I do this. So trade safe and bye for now.